And to kick off the presentation, I'm going to ask Jacqueline Gauthier, Calian CFO, to provide a financial summary of the company's results. Over to Jacqueline.
Thanks, Kevin. So let's start with highlights of 2017. We reported our highest revenues in Calian's history at $275 million. We had solid returns to shareholders with EBITDA of $23.5 million and EPS of $2.03, an improvement of 10% over the prior year. These results helped increase our share price to nearly $29 at September, which combined with our dividend payments resulted in a total shareholder return of 26%. Other highlights to note, we've increased our backlog to over $1 billion. We achieved ROCE of 31%. We had cash balances close to $30 million. And we continued to pay dividends totaling $8.5 million, representing a fiscal 2017 yield of 4%. Next, I thought I would bring this chart up again this year to evidence Calian's long history of revenue growth. Although modest at times, the cumulative impact of consistent growth cannot be underestimated. As well, looking at our results from 2015 to 2017, we are above average with an annual growth rate of 6%, with solid performance expected for 2018. Positive trends were also achieved throughout the P&L. For one, gross margins have continued to improve. At SED, gross margin reflects strong performance and delivery across all business units, supported by the continued revenue growth of the higher margin products. BTS experienced an improvement in its margins in 2016 and again in 2017, partly from winning some higher margin business, but also from the careful review of our delivery model to ensure costs are aligned to market realities. As well, we continue to invest in business delivery and business development activities to support our growth strategy, and despite flat revenues, Calian increased its EBITDA by 7% over the prior year. Finally, our collective efforts to increase margins resulted in a 10% improvement in earnings per share at $2.03. Quickly breaking it down by division, you can see that the dip in revenues for fiscal 2017 came from lower revenues in SED, fully attributable to less non-labor in its revenue mix. Looking at the gross margin and EBITDA levels, both divisions showed significant improvement over the prior year. Corporate costs have seen an increase more recently as the company continues to invest in its future organic and M&A growth initiatives. Now moving to this year and looking at the P&L for Q1 2018, we are well on our way to achieving our financial targets. Both divisions are again reporting increased sales and improvement in margins. To note, our recent ISR acquisition accounts for 4% of our revenue growth this quarter, with the remaining 6% as a result of strong organic demand in all of our service areas. As we look to acquire, it's important to look at the business from an EBITDA perspective to ensure we continue to focus on the improvement in our cash flows. As you can see from this chart, Calian has been experiencing solid growth in EBITDA over the last 4 years and a quarter. The focus is on continued EBITDA growth, while at the same time continue to invest in resources to support our new ventures and also ensure our back office is poised to integrate the growth into our processes. Therefore, it may be that in some quarters we may see EBITDA growth suffer due to the inclusion of additional resources, but rest assured this is for the benefit of future growth. Looking at the company's financial position, the balance sheet continues to be excellent shape with cash sitting near the $20 million mark. The rest of the balance sheet is basically composed of working capital with receivables that are more than 90% current and payables in line with the requirements of the business. We have no debt, and combined with a line of credit of $40 million, we are well positioned as we look to continue on our growth plans, be it organically or through M&As. We are also committed to continue to return a portion of our cash to shareholders in the form of dividends. Currently, Calian is returning to its shareholders in dividends approximately 55% of its net earnings. We intend to continue paying dividends, and we will hold the dividend amount to 28 cents per quarter until the payout ratio is below 50%. Once we get there, we will revisit the policy and determine if it's in the best interest of the shareholders to increase the dividend or instead invest the additional earnings into the company's future growth. As we move to the future, we look at backlog, especially the portion of the backlog that will be utilized in the next year. To note, the increase in the 2017 backlog shows the signing of our health contract, now renewed until the year 2030. This signing secures approximately 20 to 25% of our business for the next 12 years. As well, we began 2018 with more than 70% of our revenues already in signed contracts. So finally, as we continue with our new ventures and our focus on organic and acquisitive growth, we expect fiscal 2018 revenues to be in the range of $290 to $310 million, and we anticipate earnings in the range of $1.90 to $2.20 per share. Thank you.
So from a Calian overview perspective, the secret sauce of Calian that's driving the engine that you just saw in the financial results is obviously a very diverse business. We have 5 very distinct businesses under Calian Group Limited. With the division in Ottawa, Business and Technology Services Division, primarily a professional services organization in the areas of IT, healthcare, and training. And our division in Saskatoon in engineering and contract manufacturing. And with this diversity comes stability, because frankly, we're in many different markets, both domestically and globally. We have 5 very distinct businesses that we go to market with. We can definitely weather upturns and downturns in the markets, depending on any given day. But from my viewpoint, I look at it as a 5-piston engine. And these engines are all firing right now. And they're all firing very, very fast. So it's been great. You've seen the results of that as far as the financial results, but I'm equally excited by the growth opportunities I'm seeing in all segments of our business. We go to market with a 4-pillar growth strategy framework, and in each segment we answer 4 fundamental questions. How do we ensure that we retain our customers through a customer retention focus? All of our service lines right now are delivering over 90% customer sat metrics, and we recognize that as we grow, we can't lose sight of that. We can't lose sight of the fact that our growth is going to be totally dependent on our ability to deliver and continue to deliver the service that we have been for years. But within that, we need to also diversify our customer base. About 60% of our business is in government and public sector, and we continue to diversify outside those sectors, both domestically and globally. Service line evolution, that's ensuring that we never get so busy that we don't ask ourselves every day, how do we make sure that we stay relevant in this ever-changing world? And continuous improvement. Right now, we run the company with about 10 to 11% of revenues and our operating expenses. So what I want to ensure is that as we grow the company, we don't see that increase unduly with regard to our actual growth posture. But clearly, at the heart of our strategy is our people. And it's something, frankly, I don't think we've talked enough about. And I'm so proud of the over 3,000 people across this country that every day show up and ensure we execute not only the strategy, but ensure our customers are getting absolutely quality services across all that we do. The Business and Technology Services Division, headquartered here in Ottawa, has 3 primary service lines: health, training, and IT services. And I'll give a quick update on each of these segments. For healthcare, we go to market with 3 fundamental service offerings: clinician services, clinic management, and health practice management. Clearly, the foundation of our healthcare business has been our relationship with National Defence and now Veterans Affairs and RCMP, but we continue to diversify our healthcare business across Canada, across numerous segments. As you can see in the next chart, Jacqueline already talked to our re-win of our health services contract with National Defence, securing 12 years of business now with a very critical customer that we're very passionate and very proud to be associated with. We now extended that relationship to RCMP and Veterans Affairs, and I think we're uniquely positioned as a national healthcare company to help in the delivery of their healthcare mandates. However, we continue to diversify into new areas. If you look now, we have doctors and nurses across the country in correctional facilities, the oil and gas sector, and every day we continue to see new opportunities to leverage what our asset is, our largest national healthcare network in Canada. And our primacy business, acquired in 2012 with our relationship with Loblaws and Shoppers, actually surpassed 150 clinics across the country as well. And that's actually just a testament again to the great work the team's doing and Loblaws' continued focus on healthcare. And our training services, we go to market with two fundamental service offerings: emergency management solutions and custom training solutions. In emergency management, I think you can all agree, every day we see the impact of increased terrorism activities, natural disasters. And what we do with our emergency management solutions, we help organizations get ready. We have prevention and mitigation solutions, preparedness and capability development solutions, response solutions and support, consequence management and recovery. And as well, we complement that with a custom training solutions capability, both domestically and globally. Highlights of the year from a training perspective. In May of last year, we acquired ISR. And we're very proud of this acquisition. And let's almost a year into this now, we're seeing the true proverbial 1 + 1 = 3. ISR was a company that has incredible experience in the nuclear industry globally, subject matter expertise in that sector, and as well had complementary service offerings in our emergency management areas. They also brought a suite of software tools that are now expand our service offerings from not just services, but also leveraging technology to bring full solutions to our customers. So very exciting, and it's actually, as I mentioned in our current quarter report, they're definitely meeting our expectations, if not exceeding expectations, less than a year in. 2 weeks ago, I was briefed on the current status of our emergency management solutions and the evolution of that offerings. I am so excited about what I'm seeing there. Because now we have methodologies, we have tools, intellectual capital, we're talking about intellectual property, and how we're actually going to continue to grow both domestically and globally, helping customers get ready for bad events. And our continuous diversification, we've got a win with Canada Post on our training side, and we continue to see wins in that segment with regard to diversifying customer base on our custom training solution offerings as well. IT and professional services. Again, as you can see, very extensive service offerings across our IT business in cyber, SAP, IT development and support services, cloud consulting, and on-demand IT consulting services. And from my viewpoint, if you look at the focus areas right now, Sandra and her team, definitely in the cybersecurity practice, we've had double-digit growth in that practice now for the last couple of years. And as well, our cloud consulting and a specific focus on municipalities that Sandra and the team have been working on has been very successful. For ITPS, with a municipal focus, we have a very unique relationship with a Canadian company called Perfect Mind, which is targeting the municipal space. As I mentioned, the evolution of our cybersecurity practice continues to grow with leader Bill Dunyan. And we see growth in our historic business in Ottawa and Montreal last year with 25% growth in those segments as well. So overall, very strong. A lot of opportunities there continue to grow, and I'm equally excited about the focus that we're seeing in cyber and the municipal's play.
SED, the Systems Engineering Division of Calian, is located in Saskatoon, supporting 2 of Calian's service lines through our systems engineering and contract manufacturing capabilities. We provide these services through a pool of engineering and manufacturing talent that are shared among the projects and products that we support. Exporting over 70% of the systems engineering work that we do, we have extensive experience running projects, installing systems, and supporting our customers worldwide. The system engineering service line focuses on 3 key business areas oriented towards the requirements of their customers. The communication ground systems provides RF satellite communications systems for telemetry tracking, control, and space missions. The communications gateway and planning systems provide software solutions for real-time and non-real-time satellite communications, capacity management, and performance monitoring. The communications products provide test measurement communications products for the broadcast, satellite communications, and cable network industries. Our communications products serve as building blocks for the systems that we deliver, helping us to be competitive by productizing key components and by having more control over the overall margin for the scope of work that we do. Many of our products are sold by our customers under their brand name in an OEM arrangement using their sales channels. In addition, we sell many products directly to the market space using our own sales capability. The SED manufacturing services support the Test Aerospace and Defense business unit. These services include not only include contract manufacturing, but full engineering and product lifecycle support. We do these services for both defense and commercial industries. I would like to make some highlights of the particular accomplishments that we had over the last year. This includes a 22% growth in our product business, a deployment of a variety of satellite capacity and real-time management solutions, the installation of 7 RF Earth stations in 3 continents for 3 different customers around the world, and a $1.9 million in agricultural electronic contracts. We had a US patent approval on an innovative smart switching feature based on monitoring of the contents of redundant satellite channels. Our research and development continued in areas of advanced cable networks and technologies for V-band satellite RF systems, and we're expecting to bring some of these to light in 2018. Our research and development activities continue to build our intellectual property base and our capabilities, allowing us to bring further value to our customers. We expanded our staff size to 308 members in 2017, and with plans to grow our staff to 340 in 2018. We saw a staff growth in all areas of our business, including software developers, engineers, technologists, and assemblers. And we've expanded to a branch office in Edmonton to further grow our development capabilities. All in all, we had a very successful year, and we look forward to next year for a new set of projects and developments. Thank you, Kevin.
Thanks, Pat. Again, at SED last week, and just so stoked by the innovation that's going on there right now and all the different segments. So stay tuned as we get ready not only for our current business, but positioning for the next generation of satellites. So thank you, Pat, for that. Okay, so just a few closing comments, and we'll open up the floor for questions. From a corporate perspective, as you embrace the diversity of 5 very distinct businesses, you have fundamental choices to make on, how much of the P&L is responsible in the divisions, and basically how much consistency you want to see across the corporation. And what we've done basically, definitely in the enterprise financial management area, a strategic growth framework, our 4-pillar strategy, our enterprise risk management approach, our core purpose, vision, and values. Those have historically been running for the organizations. As you've seen in recent announcements, I've also added talent management and information technology, as I believe it's important as a company that we have a consistent view on our talent going across the company, as well as our information technology. We continue to rely more on technology in the delivery of our services, as well as internal processing. We continue aware of the increased demand in cyber and different areas. So it was time for the company to ensure that we had a coordinated view across all of our services in these segments. So with that right now, the corporate leadership team, as I call it, contains myself and Jacqueline, obviously Pat, the division president at SED. Lynn Stevens was literally announced 2 days ago as our Chief Human Resources Officer, and Jerry was previously announced as our Chief Information Officer. So when you talk about a corporate office and our Chief Corporate Leadership Team, this is who I'll be referring to in the future. I'm equally proud of not only the services and the financial positioning of the company, but from a corporate social responsibility, the difference we're making in the world in many fronts. Leveraging our national healthcare business, the Calian Military Family Doctor Network has now helped over 1,000 military family members get connected to healthcare as they're posted around the country. A major challenge for healthcare for families as their spouses are moving around the country. Frankly, the families move around and don't have access to the same healthcare and have to reroute families. So we're very proud of this. We're working with D&D, the Canadian Forces Morale Welfare Services, and again, an exciting time for us, and we're just getting going. We continue to win awards for veteran-friendly employer, hiring military veterans. In fact, since 2012, we've helped more than 550 retired military personnel transition into civilian roles, and that's over 100 year on average. But as well, we've also provided more than 115 military spouses the opportunity to get professional positions since 2016. And we've just recently won for the 3rd year in a row Canada Companies Award recognizing this. And last week in Parliament Hill, we were recognized by the Minister of National Defence, the Minister of Veterans Affairs, with regard to this ongoing commitment we have and the give back that we're so proud of. We continue to expand our research support for veterans and military's families with a relationship with CIMVR. And our staff are involved across the country in numerous community involvements and employee volunteer activities. In fact, we give our staff one volunteer day a year to ensure that they get out and be able to fuel their passion with regard to something they want to make a difference in their community. When you look at the company, a lot of times we talk about what we do, but fundamentally I ask the staff to define the why we exist. What is it that is the fundamental fabric that runs through this company on the why? And what the team came up with, I'm very proud of, because I think it does represent the reality of what this company does every day. We help the world communicate, innovate, lead healthy lives, and stay safe. And from my viewpoint, as the CEO of this company, I couldn't be prouder of the fact that I see evidence of this every day in talking to customers, talking to our staff, domestically and globally. And you'll hear more about this as we talk about our core purpose. But from my perspective, I want our investors to know not only are you getting an amazing financial return from my perspective in the company, but you're investing in a company that's making a tangible difference in the world. It's been recognized, I'm not going to go through each of these bullet points, but we see in more and more coverage with regard to the company. It's always been viewed that this is one of the best kept secrets out there, and we get to see coverage right across the country now, across numerous different platforms. We continue to invest in our social media platform and ensuring that the Calian story is out there to educate in all the great work that's going on in this company every day. So in closing, from an investment value proposition, if you're looking for a company over 35 years in business, now over 65 consecutive profitable quarters, a dividend stream of 3 to 4%, share value growth, a total shareholder return in 2017 of 26%, a backlog of over $1 billion, a strong balance sheet, no debt, a very strong and passionate management team, a company that's focused both on organic and acquisitive growth, and a very clear and differentiated value proposition across multiple markets, then I think you should be considering Calian Group. The moniker stability through diversity, focus on growth is the rallying cry for the company. From my viewpoint, I am excited again to be the CEO of this company. I'm extremely proud of the team for the results in 2017 and obviously Q1 for 2018. And I'm very confident that stability through diversity and focus on growth is what you'll be seeing from this company moving forward.